My guest today is LaTasha Waddy. In addition to her role as president of NFM Lending, she has been doing amazing work on community development financial institutions aimed at expanding homeownership access for Black, Brown, and other communities of color. And she's one of the few executives in this industry who's taken that work outside of the office entirely, writing a children's book and building financial literacy content for teenagers. Today, we're going to get into her leadership philosophy, how she's thinking about the market cycle, and what actually works in underserved lending versus what just looks good on a press release. We also discuss her upcoming session at the gathering. All right, LaTasha, thank you for joining me.
Thank you for having me.
Yes, ma'am. So I've got a lot of stuff that I wanted to cover with you today. And I wanted to talk strategy and leadership. But before we dive into all of that, I want to know, or I'm curious to know how did you end up here? I mean, what drew you to the industry initially? Most people that I know, it's nothing really drew them. They kind of fall into it. But what about you? What's your story?
Yeah, it's the same thing. I fell into it, but I fell into it with a friend. I had a colleague that I had worked with in private practice when I graduated from law school. We were fast friends. She was on the regulatory side of the law firm. I was on the transactional side. We stayed friends for a long time. Fast forward to 2010, she was general counsel of NFM Lending. And she asked if I was interested in coming in-house and leaving private practice. And my first question was, what does NFM stand for? And so met with the individuals here, met with the leadership, and I was sold on whatever it is that they were doing. I was like, I'm in.
Okay. So you say from the transactional side of the firm, what cases or what sort of law were you practicing then?
Really, everything related to real estate. So from soup to nuts, transactional, I represented a lot of builders. And so taking land, dividing the land, putting a subdivision on the land, putting a HOA in place, doing all of the development work, all of the financing behind that, and then passing that community off to the owners as the association. So I did a lot of that. I also did a lot of real estate development. Individuals in the DC area that were buying properties and converting them to condominiums, all the transactional work there, and then also title work. And so we had a settlement company at one of the firms that I worked for, and I did a lot of settlements and realized very quickly that this was not necessarily where I wanted to end my career, but it was a great start in terms of getting into the mortgage space. And then lastly, before I joined NFM, I was actually doing a lot of the workout transactions from the Great Recession. So Fannie and Freddie had tasked several law firms with going through documentation to determine where there were missteps, if there was fraud, so that we can exercise our repurchase rights. And so that's what I was doing right before I started at NFM in 2010.
Did you ever get fool around with or get involved with like tenant disputes or anything like that?
Yes. Fortunately, unfortunately, it's known to people in the DC area, but DC, much like New York, has a lot of tenant rights. So they have a lot of rights related to tenants having a first right of refusal if the owner wants to sell the property. And so, yes, we represented a lot of landlords in my prior life. And even now I'm on a board for an affordable housing developer. And so even in that, I get into some of the landlord tenant issues that we're having as the owner of the property.
I see. So the background that brought you up, more through the legal side of the business it's just not typical. It's not a typical runway to becoming the president of, a lending institution. So, I'm curious to know when moving from CLO to president, in my imagination, that would be a significant gear shift in that any role that you're tasked with filling, there is a lens in which you view or you filter your decision making process. So when you shifted over. Was there a mental transition or mental shift that you had to adopt a different lens from more, legal focused or even like risk averse focused to this new role?
No, that's a great question. I actually get that a lot. I get that mostly from my legal colleagues because they're like, "How'd you do it?" So I'm a business attorney through and through, and I'm also the daughter and the sister of business owners, very successful business owners. And so I have been around business, around entrepreneurship for for my whole life, honestly. And so coming to NFM was ideal because I was able to not just represent the organization, but really be in the business of the organization, which was perfect for me. And I was fortunate enough to work with individuals who really enjoyed my curiosity. And so very early on, I wanted to know about capital markets and how that works. I wanted to know about operations and underwriting and risk and how technology plays into all of this. And so on top of the fact that, yes, I represented the organization in regulatory exams and litigation and did all those things, I very much was a part of the business conversation, the entire experience here. And so when David Silverman, our founder, was talking about what succession looked like for him, because within the organization, especially mortgage industry, either you're going to sell to another player in the industry or you're going to, do that, or you're going to figure out a path where the organization succeeds the founders or the visionary. And so in those conversations with David Silverman, I put my name in the hat essentially and said, listen, if you're thinking of some sort of transition, what's going to be the least disruptive? Where can I add more value to this organization? And what does that look like from a title perspective, from a leadership perspective? And so it certainly was a conversation that went on for several months before the official announcement. But nevertheless, I just feel much more seated in this role. I feel much more that I can give more value in this role and that I can take all of the legal knowledge that I know and really combine it with my business acumen and really just continue to serve this organization and do it at a much higher level.
Yeah, you became president at a really interesting moment in the market where it's a strange market. I mean, historically speaking, right?
Yes.
Where there's so much happening, but at the same time, there's kind of a weird, eerie calm,
Yes.
kind of overlaid over that, which I don't really know how to quite verbalize very well.
Yeah.
But you taking over this role, what are the first, I don't know, 2 or 3 things that you really put your hands on to set the tone, like not the long-term vision, but like immediate, this is who we are now moving forward?
Listening. So this year is really intended on me listening to the sales team, listening to the other business leaders, and really listening from their perspective on what they would like to see in this role as the president of the organization. So the first thing I'm doing is I'm really listening. I think the second thing, which I've been chomping at the bit to get to, is recruiting. I do think that being a lawyer and convincing someone to pay $400 or $500 for your services, especially a transactional lawyer, that's salesmanship. Or that's salespersonship. So for sure, I have a background of trying to convince people that they should either use my services. And so recruiting feels a lot more aligned than I think a lot of people think about if they're thinking about an attorney. The third thing I would say really is community. And so much of what I love and much of what I do focuses around community, focuses around financial literacy. And so, for sure, my stamp, my mission, my why is to increase home ownership. And there we are in really interesting times. And for some, it's like, what is happening right now? I'm like, can't be more excited because there's this convergence of technology meets, consumer experience, meets margin compression, meets consolidation. And then, forget about what's happening in the administration and how they're thinking through what happens with the CFPB. And so, based on my experience and my background, I feel like I'm meant for the moment, quite honestly.
Right. I think you just answered it, but I wanted to ask you this specifically because I was very curious about this. I've seen it. You and I haven't had a conversation before, so I guess I came up through the mortgage side of the industry as well. I was an originator for several years before I was recruited to the corporate side, and so I know the inner workings, I guess, of executive level leadership at a mortgage company. And this is what I was very curious to ask because I've seen it happen multiple times and it's been handled different ways by people in your position. Because I want to talk to you about the trust and the buy-in from your LOs.
Yeah.
On the whole, originators can be skeptical, I think is a gracious term.
Be kind. I have a lot of them listening. Be kind.
They can be skeptical, and rightly so.
Yeah.
Anyone in a leadership position that hasn't originated, that has not interacted with a home buyer and are making big decisions in many regards on their behalf that affect their relationships, affects their bottom dollar, and how leaders establish that trust and establish that LO from the get-go is it shadows most of their relationship moving forward. So how did you establish that trust and get their buy-in? I know that you've been there previously for years as a CLO, but how did you manage that?
I've never separated myself from the sales team. And the reality is there's an evolution that's happened really post 2014, where there's a lot of regulation around disclosing to consumers. TRID happened. A lot of things happen, RESPA enforcement, et cetera. And so who were the salespeople going to set up their marketing service agreements, or who were they going to talk about closing transactions and CDs? They were coming to our department. And so for me, I developed this relationship very quickly with our sales team because there's a certain reliance, I will say, on compliance, on legal. And Zeb, it's nothing like getting sued together that bonds you. And so
trauma bonding.
Yeah, it's trauma bonding. And so very much so when individuals were coming to join the organization, I was really their first stop. And because I really tried to be relatable and make it less scary and tell them it's going to be okay, you have to do these things to stay in compliance with your former employer. And then also, of course, leading them through all of the regulatory shifts, it builds a certain level of trust. And then ultimately getting to know people. I've never been one, and my team knows this, don't come to me with a problem unless you have a solution that you're willing to suggest. And so with our sales team, I always wanted to not just say no. I wanted to think through business opportunity. Where can we, risk assess the question, how can we get through? How can we make this business go and support each other in a way that they feel like there's a success there, and I do too, from a regulatory or legal or a compliance standpoint. But I really love business. So I'm a business lawyer. And I always say this, even when I was a CLO, I would say that I'm a business attorney that works for a mortgage company. And that very much is true. And I do love my salespeople. We have some of the best sales leadership. And I'm curious about what they're doing, what they're building, how I can help them succeed. And this is just how NFM has done it. I've only worked for one mortgage company. And so I don't have a frame of reference how it's done anywhere else. But my experience is I've been lockstep with my sales team the entire 15 years. So, and then when the announcement was made, I called around And I said, what do you think about this? You know, how are you feeling about this? What can you tell me I should be doing as the president? And the majority said, you're already doing it. Just keep doing it.
Okay. So I wanted to talk to you about Lucas. You mentioned financial literacy, which ties into the larger conversation that I wanted to have with you, or part of the conversation I wanted to have with you. Can you talk to me about Lucas Home Loans? Start with what it is. Really, I guess, can you share with the audience what a CDFI is and what Lucas is, and how maybe that differs from a traditional lending shop?
Sure. So Lucas Home Loans, historically, NFM has been very good in fair lending, very good in stepping into the SPCP space, very good in determining where there's opportunity to reach consumers that may not be coming in from a traditional method, whether they're first generation, first time homeowner, women consumers, single women consumers. Like, we've been so good about taking this data and seeing where the opportunity is to dig deeper. And so Lucas Home Loans was started really an idea about how do we meet this moment where the data is showing us that this next generation is going to be, multiracial, multi-generational households. They're going to have gig economies. A lot of them are going to be self-employed or some sort of hybrid of that. And so how do we meet this moment knowing this consumer is here today, but it's also coming with Generation Z and Alpha and the generations that are coming behind them? And so two things, we said we wanted to be intentional and purely focus on education, next generation, first-time home owners. And we thought it would be better to do that as a community development financial institution. And so community development financial institutions, there are many benefits to them, but one of the benefits is you're able to partner with the Federal Home Loan Bank. You're able to partner with Treasury on opportunity to do things that are more community focused when it comes to lending, but also to require this educational experience, this foundation for education. And so we started Lucas 2 years ago. We're in the process of waiting for our CDFI approval now. I'm leaning into it from the technology standpoint. So Lucas stands for Lending Under-Resourced Communities Affordable Solutions. We've created this little character called Little Lucas. He's so cute. And so I'm building this app right now that's going to provide this curative experience to consumers where they understand budgeting, they understand how down payment assistance works, they understand how to save for big events, the wedding, retirement, college, the dream trip. And I've done it with my team by creating this curative experience where we take the data that we know from the consumer and we say, Zeb, you have all of these subscriptions. Let's figure out what you're spending on. Or Zeb, you want to go on vacation. Let's see how much you make and let's put a budget together so you can save towards that. And you own a home, so let's talk about how insurance and taxes fluctuate, but do it in a manner where someone understands it. The biggest issue I see with the mortgage industry and mortgage professionals is we get caught in the jargon. We get caught in the acronyms. RESPA, TILA, TRID, like we've got an acronym for everything. And so how do we take that language, make it conversational, normalize it so that people feel comfortable, not just on their homeownership journey, but making other financial decisions. And so that is what Lucas Home Loans is all about. I'm super excited to offer it to the world, quite honestly. And, we're going to continue to build and lean on this experience of having a very educated consumer.
So you talked about diving into the data for, much of your decision-making process, but I'm curious to know, is there something or one or two things about this initiative or going throughout this process that you and your team have learned that you could not have learned or known by simply relying on the data?
I did not realize the habit portion of it. So I had an intern work for me. She was an environmental science major. I intentionally hired someone who wasn't in finance, wasn't interested necessarily in mortgage, because that's our consumer. 95%, probably 99% of our consumers aren't in the industry. And the first question she asked me, and she's a junior in college, she's like, "What's a mortgage?" And so, in that experience, understanding that just it's not talked about whether your family owns a home or they don't own a home, it's still not talked about. And so, that's the biggest thing I think that we learned. The other thing is, how do you fill that trust gap? You want to have this digital technical experience for the consumer so there's speed in the transaction, but you don't want to lose the fact that this is a very personal journey. It's very emotional, purchasing a home. And so the biggest thing we learned was the gap in knowledge in what this next generation first time home owners know, but then also how do we dial it up where we've got the best technology and our humans are focused on really educating and helping the consumer along in the experience, and just realizing there are just some things that people are just not going to know or they're not going to understand, doing that in an approachable manner.
What do you think is the best first step, first place that a lender should start if they want to move towards, and not necessarily becoming have an arm of the CDFI or something, but if they want to move in the direction of more community involvement, more financial literacy and education, and extending more home buying opportunities to traditionally underserved communities? What's a maybe not an easy first step, but an effective and practical first step?
Yeah, and NFM is doing it, right? Like the retail. This is why independent mortgage bankers are doing the majority of mortgage transactions. It's because we live in the community. And so by living in the community, by being retail oriented and having locations, you're more familiar with the nonprofits, you're more familiar with the community, you're more familiar with pricing and neighborhoods that are going up. And so I think that if you take, that experience of where you actually sit, really explore your HMDA data for where you're seeing opportunity, where you're seeing new communities pop up or employers moving or relocating. I think you start there, and then you branch out from that and determine what other nonprofits perhaps are in these communities, are servicing these consumers. A lot of people historically have started with churches. My father owned a home, and he started with his church. He had someone who knew someone at the bank, and that's how he got his mortgage loan for 18%. And so the other thing I would say is we should focus on the budget and not necessarily the interest rate, because at the end of the day, what am I paying each month? I'm paying $1,500 or I'm paying $2,500. I'm not necessarily saying each month when I pay this mortgage, my interest rate is 8%, my interest rate is 9%. I'm really just saying, how much am I spending on a monthly basis? And so if we can reframe how we talk to consumers, it comes from a budgeting standpoint. And then you back into, does the interest rate match this? Do you need to buy down? Do you need more of a down payment? So it's budgeting, it's looking at your HMDA data, and then it's also looking at where you sit as a retail originator and what's around you in terms of community development.
Right. And I would imagine that the budgeting stuff is spearheaded by an educational initiative, so that by the time someone is ready to pull the trigger, they're ready to, or they qualify for a home, or whatever, they understand, they really understand the concept of budgeting, not in an abstract way, but in a way that they know is going to affect their quality of life moving forward.
We might have to also think about home ownership like we think about preparing a kid for college. Mm-hmm. And I say that I have three children. I have three bonus, three bio, two bonus. I have five children in total. And in some shape or fashion, they've either gone on to college or done training after high school. But I started talking to my children about college in eighth grade before they went to high school. And so, why do we think as a society that we should start talking to adults about home ownership exactly when they're ready? Like, I think we have to accept in some circumstances that funnel, that conversation should almost have a 4-year run. And the good news is technology is less expensive than a human actually continuing to interface. And so if you can build the technology that keeps the individual engaged, that keeps them learning, you have the ability to have that longer funnel where people are learning in college about home ownership, and we can drop this first-time home buyer age down. And so I think as lenders, we should start thinking about the fact that if we're going to reach under-resourced consumers, if we're going to reach first-time, first-generation homeowners, that we should start to think about a longer funnel. 6 months, 9 months might not be long enough in the current circumstances, especially if they need to save for a down payment, they need to fix credit issues, et cetera. You might be talking about 3-4 years. And how do you service that consumer while they're preparing? Technology can do that very seamlessly and in a much affordable manner for a lender.
Yeah, I see so much of that on my end outside of HousingWire. I am an English professor. I teach at a college. It's an underserved community, let's say. And I started for many years back. The more I got involved with the mortgage industry, I started seeing inroads to teach financial literacy to my Composition 1 courses and tie it into the overarching curriculum. But and I also teach one night a week. I teach at the federal prison as well, doing the same thing. And the lack of any sort of understanding towards basic finances, credit, budgeting that 18, 19-year-old kids have now is pales in comparison to what whenever we were 18, 19 years old. I mean, there's a much stronger foundation that we went out of school with than they have now. And they're going out into an even more, I guess, predatory world, I guess, with access to credit to wreck their lives for the next 20 years that they spend forever correcting. So, I agree that's needed now, more so than ever. One thing I wanted to ask you and talk to you about too is you're pretty open about mentorship, and not just mentorship, but sponsorship. Specifically, which is not something that I hear a lot of people in this space talk about mentorship. I don't hear really anybody talking about sponsorship, not like you do. So can you, first of all, what's the difference between the two, and what does that look like from your end?
Yeah, I mean, I think it's very simple. Like, mentorship is preparing an individual for a job or a career. Sponsorship is giving them the career. It's giving them the job. It's calling in favors, or it's saying, I can open this door for you, and here's the opportunity. And it was done for me. I very much still have a lot of individuals that will call, will check on me. Well, I can run ideas by, but I've also had individuals who I've said, I need you to make a phone call. And they made the phone call. And I think that is the difference. And you're not able to do that unless you're in a position to do it, unless you're in an influential spot. And so as an attorney, but also now as president of the organization and having a team report to me, I'm very interested in giving individuals a career, whether it's at NFM or outside of NFM. I worked in some very toxic environments. I worked with some very horrible people in the past. And one of my takeaways when I was very young is, like, if I'm ever in a position to lead people, if I'm ever in a position to be a manager, I'm just going to do it so differently because I know what that looks like when you have an idea and someone talks over you or they dismiss you, and, creating an environment where people actually feel like they're contributing no matter where they are in the house, no matter what they're doing. It's important to me. And I also think for this next generation, talking about succession, Zeb, like this next generation, I think they crave it. And I really think they're looking for individuals who can not just talk to them about what they did, but they can actually say, here's where you are in your career. Let me help you along and see that you're successful. And then, my only ask is always that you do it for someone too.
You pay it forward.
You just pay it forward. And I love what you said about, going into the prisons and helping in education and what you're seeing from your perspective. But it takes people like you, it takes people like me who are in positions where they're able to share that knowledge, that they can go into these settings and feel comfortable and make the other individual feel comfortable and just kind of lead them along the way. And so I'm very much interested in how, even in this role, I can continue to be a mentor and a sponsor to others. I've been very fortunate for the people that have reached out to me on LinkedIn and on my Instagram. And, they've asked me certain things and I've been able to give them some direction and encourage them, because I know that I was in a place where, for sure, I wasn't even sure I wanted to be a lawyer because of some of the dialogue or some of the interactions I had in the past. But it was my sponsors, it was my mentors who, really told me, like, stick with it. You can do it. It's going to be all right. And so if I could do that for someone else, that is part of my why.
Well, let me ask you this one then. If for anyone that is looking to, that has, executive level ambitions or even C-suite level ambitions, and they aren't fortunate enough to have someone like yourself in any position to sponsor them and to help them or to guide them or mentor them, what do you think are the two most, not something that you could Google or chat, like the two most underrated or overlooked skills that they should be building to bridge that gap?
I think emotional intelligence is one. And so knowing how to read the room and knowing the individual that you're having the communication with and leaning into that, I think it's underutilized. I think that certainly, I would say women probably do that a little bit better than men when it comes to emotional intelligence.
I have no idea what you're talking about.
But I would also say that the beauty of, social media and books and all of these things that we have access to, I have mentors that I've never met. So like Melody Hobson, who is, on the board of Starbucks. She's married to George Lucas. She is a, financial titan, really. She's a mentor to me. She has no idea, but it's because I've read her books. I watched her podcast religiously, and I've just studied her career because that's something I aspire to. And so even if there are individuals that you see on podcasts or who've written books, who've been successful or who've coached very successful people, grab the book, listen to the podcast, really think through what the steps are that individual took to get to where they are. And you can emulate that even if you don't have that person in your immediate environment.
That's great advice. That's really good advice. We're running up on our time. I got one more thing that I want to talk to you about before we part. And you'll be speaking, or you'll be on stage speaking at the Gathering next week in Austin. This episode should come out on Thursday, so it'll be a little bit of a preview. Mm-hmm. And without giving away too much, can you share what you're planning to bring to that conversation, and what do you hope people will walk away from thinking about that they weren't thinking about walking in?
Yeah, I'm nerve sighted. So I am a huge fan of my mentor, who I'll be interviewing, Patty Arvialo, and we'll be talking about the plot twist of some of the things that she said at the last gathering in terms of her chasing Rocket, and that's who she's chasing, and what's happened there with this acquisition of Mr. Cooper and Redfin, and also talking about how you can reimagine what you're doing where you are in the mortgage space. Because if no one can tell you how to go from the lawyer for the organization to the president, it would be me. And just thinking through really what succession looks like for this industry. We all know this industry is aging. I think our average loan originators are in their maybe early mid 50s. And so how should we as an industry be thinking about reimagining an intentional introduction into the industry? At the top of this conversation, we talked about how people fall into this industry. They're referred, they know a friend. And look how successful, or look how much this industry has done for its homeowners, its consumer. Imagine a world where people actually decide that this is their career and they have that level of intentionality and what they can do to continue to move this conversation on homeownership forward. So that's what I'll be talking about at the gathering.
All right. Well, look, thank you so much for joining me, LaTasha. I really appreciate you taking the time. Really enjoyed this conversation. And I very much look forward to seeing you and Patty on stage together next week.
Yes, likewise. Thank you, Zeb.
Yes, ma'am.